Hey everyone! Welcome back to our channel. If you're new here, I'm your name, and today we're diving into a topic that's becoming increasingly popular among investors, ETFs, or exchange-traded funds. Whether you're just starting your investment journey or looking for ways to diversify your portfolio, understanding ETFs is essential. So, let's get started. But first, have you ever wondered why so many people are talking about ETFs? What makes them a favorite choice for both beginners and seasoned investors alike? Well, let's break it down. Let's start with the basics. So, what exactly is an ETF? An ETF, or exchange-traded fund, is a type of investment fund that is traded on stock exchanges, much like individual stocks. It holds a collection of assets, which can include stocks, bonds, commodities, or even a mix of these. For example, if you invest in an ETF that tracks the S&P 500, you're essentially investing in a fund that holds shares of all 500 companies included in that index. This means that with one purchase, you gain exposure to a wide variety of companies, rather than having to buy shares of each individual company. Now, let's talk about why this matters. One major advantage of ETFs is diversification. When you invest in an ETF, your money is spread out over many different assets. This can help reduce risk because if one company performs poorly, it won't have as big of an impact on your investment compared to holding just one stock. According to a report from the Investment Company Institute, as of 2023, more than $5 trillion is invested in ETFs in the US alone. This huge number shows that many investors appreciate the benefits that ETFs offer. Another reason why ETFs are appealing is their liquidity. Since they are traded on major stock exchanges, you can buy and sell shares almost anytime during market hours, just like stocks. This gives you flexibility and control over your investments. In fact, many ETFs have a low expense ratio, meaning they are cheaper to manage than traditional mutual funds. This can save you money in the long run, allowing you to keep more of your returns. Let's take a closer look at the different types of ETFs. There are several categories, including 1. Stock ETFs. These funds invest in stocks from a specific sector, country, or index. For example, a technology ETF might include companies like Apple and Microsoft. 2. Bond ETFs. These invest in various types of bonds, giving you exposure to fixed income securities. This can be a great way to earn income while still having some level of diversification. 3. Commodity ETFs. These funds invest in physical commodities like gold or oil. If you believe the price of gold is going to rise, investing in a gold ETF could be a way to capitalize on that without needing to buy the physical commodity. For international ETFs, if you want to invest in markets outside your home country, these ETFs can provide exposure to foreign markets without having to buy international stocks directly. 5. Thematic ETFs. These are designed around specific themes or trends, like renewable energy or artificial intelligence. They allow you to invest based on your personal interests or beliefs. Now, you might be wondering how to choose the right ETF for you. A good starting point is to consider your investment goals. Are you looking for growth, income, or perhaps a mix of both? Research the ETF's performance history, expense ratios, and the underlying assets it holds. Websites like Morningstar provide extensive data on ETFs, making it easier to compare options. Let's discuss some practical examples. Imagine you're interested in investing in the technology sector but don't want to pick individual stocks. You can choose a tech-focused ETF like the Invesco QQQ Trust, which tracks the performance of the Nasdaq 100 index. With this one investment, you gain exposure to top tech companies like Amazon, Tesla, and Google. Additionally, if you want to add some international exposure, consider an ETF like the iShares MSCI Emerging Markets ETF. This fund invests in companies from emerging economies around the world, helping to diversify your portfolio further. Finally, let's talk about risks. While ETFs can provide diversification, they are not risk-free. The value of your investment can go up or down based on market conditions. It's crucial to do your homework and understand what you're investing in. So, to sum it all up, ETFs are a great way for beginners to start investing because they offer diversification, liquidity, and cost-effectiveness. They allow you to invest in a wide range of assets without needing to pick individual stocks, making them a perfect option for those who are just starting out. If you're considering adding ETFs to your investment strategy, make sure to research and choose funds that align with your financial goals and risk tolerance. If you found this video helpful, please give it a thumbs up and share it with your friends who might be interested in learning about investing. Don't forget to subscribe to our channel for more educational content on finance and investing. And as always, drop your questions or thoughts in the comments below. We love hearing from you. Thanks for watching and happy investing!